We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Markets on edge, stocks lower, oil surging as President Trump's primetime address dampens hope for a swift resolution in the Middle East. Tariff announcements on deck. The U.S. set to roll out a tiered system for steel and aluminum imports, as well as new levies for some drug makers. And NASA astronauts in a historic mission to lap the moon reach a stable orbit. All right, well, it is not liftoff for stock futures this morning. It is quite the opposite. After 2 days of gains, we are looking lower because of what you see in front of you. Brent crude at $108.84 a barrel, very close to 109, and that's spread with WTI now just about $1.50. It's incredible, the change in markets overnight. Terry Haynes of Pangea saying Trump punctured the market's Iran fantasy about a quick, definite end to the hot war. That's for sure. There was not much that was clarifying about what Trump had to say, and it didn't sound like he was backing down either. If you look at the 10-year yield, we're up about 5 basis points, and that's across the board and not just in the United States but around the world. Japan had basically a failed auction earlier, and that 10-year yield was up 9 basis points. Let's flip the board and look at futures, because after those 2 nice days of gains, look where we're headed. Lower, it looks like, if we hold on to these losses until the market open. And then the dollar index back to the war trade, up 0.4%. All right, let's get to some individual movers now. Here's Abir Abu Omar.
Good morning, Vonnie. Well, with what is happening in the U.S. and the pre-market image that we're seeing, it's really hard to find a sector outside of energy that is doing well. And this is what you're seeing reflected on the board behind me. And that is the likes of Chevron, Occidental, Exxon really surging this morning, as opposed to what we're seeing in the futures picture, down more than 1%. And this is on the back of President Trump's remarks yesterday that really put further those talks for a resolution in the Middle East after optimism that we saw in the session prior to that. We flip the board and the negativity starts to show, and that is reflected in NVIDIA. If we flip the board a little bit, and well, the board is not flipping, but NVIDIA is one of those stocks that is not doing well this morning, Vonnie, and that is on the back of those sort of risks that we're seeing in memory chips. But we flip the board again, and the negativity is still pretty much there in airlines. Now, airlines are in a sector that is not doing well at all today. We saw this performance follow a negative performance in Europe, and that is on the back of surging jet fuel prices and crude products, Vonnie. And we just saw a hot headline flash across the terminal just less than 30 minutes ago about European diesel surging above $200. So this is also reflected in the airline space, with European airlines also not doing well. A Morgan Stanley report downgrading some names on the back of soaring jet fuel prices as a result of the war in the Middle East. So a really negative day we are looking for at the open today. Vonnie, back to you.
All right, Abir, thank you so much. Abir Abu Omar will be back later in the hour. Also coming up this hour, more on the market swings and inflation woes. We'll speak with Peter Kinsella of Union Bancaire Privée. President Trump fails to calm anxiety surrounding the war with Iran during his primetime address.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death.
Certainly, investors not reacting too well in terms of risk, at least to what the president had to say. Joining us now from Washington, from our Washington Deputy Bureau Chief role, is Laura Davison. Laura, markets were not anticipating this kind of a speech, particularly after having been set up, it seemed like all day, by the president, giving interviews to various outlets, suggesting that this whole thing might be over in 2 or 3 weeks.
Yeah, there was a lot of optimism going into this address that there would be some sort of concrete plan, some sort of announcement about what the scaling back of this war would look like. Instead, investors got the opposite. They got even less clarity than what we had in recent days from a variety of different statements from the president. He, said that he was going to be ramping up attacks on Iran in the next 2 to 3 weeks. He said he then also wants to see, a deal with Iran at the end of that period. Hard to see how that comes together. And then if there is no deal, then he would look to target electricity sites within the country, which would be a major escalation. So really, Trump here is sending a lot of mixed signals, clearly trying to keep all his options open, both military and diplomatically. But there was not a sense that, that there is some sort of resolution, whether diplomatic or military. He didn't really give any indication of what his key goals were. That's why we're seeing some of this market reaction. And all of the diplomatic push has really been shifted to a group that's being led by the UK, a group of 35 countries talking about ways to open the Strait of Hormuz. That group does not involve the U.S. So we really have sort of two tracks here happening of one, the UK and other U.S. allies operating separately from the U.S., while as Trump is continuing to talk about, bombing, but also, nebulous peace talks.
Yeah, exactly. And that group of 35 plus the UK, as you say, trying to figure out some way of maybe incentivizing Iran to open the Strait of Hormuz, if not trying to force Iran, although I think that's been proven to be undoable. A few hours before the president's first address to the nation, we had an open letter from the Iranian president, Laura. How unusual is that, and what was his objective?
This is highly unusual. This is the kind of thing that we have rarely seen from Iran to issue some sort of open letter to the American public, where it was highly critical of the U.S., its negotiating tactics, and sort of encouraged Americans to look beyond what they say is sort of maximalist, shady rhetoric from the White House. This is an interesting turn of events here, and that it is sort of Iran using the playbook that Trump uses a lot of go out on social media, be big, bombastic, criticize your enemy, and try to see if you can, negotiate that way in public with it in a very flashy sort of way. Unclear that this is going to do a lot to sway the American public, but it is a sign that, Iran is not defeated. They are not looking to kowtow to the American president. And the fact that it hit just a couple hours before Trump was set to have this big address, which turned out to not really have packed the punch that many thought it would, just signals that this conflict is not, at least diplomatically, anywhere near its end.
Yeah, absolutely. Laura, thank you so much. That is Bloomberg's Laura Davison. And you can follow our continuing coverage on Iran. Just go to TLive Go, TLIV Go on your terminal. So oil soaring again, along with grain prices and other gases and refined products, as uncertainties around the war remain high. European diesel futures, for example, climbing as well. Converted to dollar per barrel terms, they hit $200, the highest since 2022 amid limited supply. Here for a closer look now is Bloomberg's Emma Ross Thomas. And Emma, we have plenty of countries actually sort of trying to scale back usage of fuels. For example, South Korea. We have Japan looking to the United States for helium and so on. How widespread is, I don't want to say panic, but is the fragility of these markets?
Yeah, so I think that from the very beginning, almost a month ago, the panic, those measures that we saw that most in Asia, didn't we? That the hit, the queues, the rationing, the attempts at stockpiling, that was happening in Asia. Australia is another market where we've seen a bit of strain. As you mentioned earlier, the price of diesel above $200 a barrel, and what we have seen in Europe, as this crisis goes on, what we're hearing in Europe that there could be shortages in the coming weeks. We've spoken a lot about jet fuel, haven't we? And what we're hearing in Europe is that we're fine for April, but come May, which is not that far away, there could be issues. So, yeah, the refined product is certainly from the beginning where we've seen more stress, haven't we? And that's only set to continue.
Yeah, and if I remember rightly, back when Russia invaded Ukraine, we sort of didn't see the full extent of the effects of that for several months. In fact, it wasn't until really well into the winter, Emma. I mean, is that something we should be looking forward to at this point?
I mean, with this is, we've said this from the beginning, haven't we? It's all about duration. It's just over a month now. the scale of the supply loss is huge. The duration for now, it's a month. And I think one of the reasons that the market is freaking out today is because of the Trump comments last night really left it a bit open-ended as to how long this could go on. And so just the longer it goes on, the more the stress.
Yeah, Emma, so remember when Trump changed the deadline for Iran to sort of, I don't know, meet his demands? And if Iran didn't, then he was sort of all bets were off the table. Energy infrastructure was really in play. Is that the deadline we're looking out for next? Because that's early next week.
Yeah, so I think the market is looking past. I think that the latest guidance we have is what we had last night from Trump, and I think that's what the market is focused on. I think there are two things, right? One is the closure of the Strait of Hormuz, which everyone is obsessed about, but then there's the other piece, which is the risk of energy assets being hit. And one thing that Trump said last night, which I think is quite important, is he said we haven't hit the oil assets, but it would be the easiest target. And of course, one thing to remember is that Iran has been exporting a lot of oil. The one country that the Strait of Hormuz is not closed to is Iran, and that is one of the. When we think about the buffers that are available, one of those buffers is actually Iranian oil that is still getting out to world markets. And so, if Iranian assets were hit, that would be another jolt to the market. And of course, then you also think about retaliation to other energy assets in the region. So it's these two things, right? It's the Strait of Hormuz closure, which is very important, but also the threat of more damage to energy assets. And I think the rhetoric last night probably pointed a little bit in that direction.
And it's being reflected in markets today. That is chilling. Emma, thank you so much. Bloomberg's Emma Ross-Thomas. Well, domestically, turning to tariffs, the Trump administration is preparing a new tiered system for its tariffs on steel and aluminum products in order to simplify the process. Joining us now is Bloomberg's Brendan Murray. So we've been speaking to people familiar with what's going to come out today. Brendan, what are they telling us?
Well, what they're telling us is the Trump administration is finally hearing the pleas from the American importers who are having a real hard time complying with this steel and aluminum tariff program and all the products that they hit. So what it sounds like, and our reporting tells us that the president is going to announce something of a simplification of that to where it's easier for companies to decide on their customs declarations what amount of steel or aluminum in those products they have to comply with. So it's a step in the direction of helping companies manage through the tariff disruptions and the extra costs, but it's certainly not any step backwards from the steel and aluminum tariffs that they've applied.
Well, so how were derivative products treated before? Was it a self-reporting system?
So it was, you had to determine the amount of that steel or aluminum in that particular product, and then you had a tariff based on the quantity of it. What they're going to do now is base it on the price of the overall good that contains the metal. So it would appear the administration thinks will make it less complicated and make it easier to figure out what the tariff rate is going to be on those products.
If the White House is shifting tariff from content now to the full value, how are we doing the calculation? Is it going to make it more costly or less costly for the importers?
It's going to. We don't know yet, and we'll have to wait to see what the White House announces in terms of the details of this. But it's certainly not going to make things less costly. The tariff rates will still apply. It's just going to the 50% and the 25%, but they're going to move it around, and what those rates apply to will be different. And so it doesn't sound like it's going to make anything less costly or reduce the tariff burden on American importers.
Just the difficulty. Refunds. Where are we on that?
So there's a mad dash to apply for refunds, and and the process to do that sounds very slow. It could take months, if not more than a year, for companies to get refunded the tariffs that they paid. And of course, you had companies that paid the tariffs that didn't pass those costs along onto their customers or their suppliers, and those customers and the suppliers are coming to those companies and saying, hey, if you're getting a refund, what about a break for us too? So it's become a real tangled mess that the Customs and Border Protection Agency has to deal with, but ultimately it means $166 billion of money that's sitting in the federal treasury that needs to go back out to the companies that paid it.
Yeah, and at some point the Treasury market will be looking at that rather than the impact of war. Brendan, thank you so much. That is our trade czar, Brendan Murray. Now, two other top stories trending on the terminal this morning. The UAE has called on the United Nations to take immediate action to reopen the Strait of Hormuz. The letter asks the Security Council to authorise various measures, including force, to restore free passage along the strait. Air France KLM submitted its first bid for a stake in Portugal's flag carrier TAP Air. Air France KLM, Deutsche Lufthansa and IAG were all invited last year to submit preliminary offers for TAP, one of the few remaining mid-sized carriers in the region open to acquisition. French authorities have charged and jailed an adult and 3 teens over a foiled bombing attempt near Bank of America office in Paris. Authorities are investigating possible links with a pro-Iranian propaganda video released by a group targeting the Jewish community in Europe. Coming up, looping the moon. NASA's Artemis II astronauts in safe orbit and set to fly further in space than anyone has ever been. More next. This is Bloomberg.
Booster ignition and liftoff. The crew of Artemis II now bound for the moon. Humanity's next great voyage begins.
And that was just about 10 hours ago now. NASA successfully sending 4 astronauts on a 10-day mission around the moon. The Lockheed Martin-built Orion capsule remains in stable orbit now as the crew gets closer to the lunar surface than anyone has been in more than 50 years. Bloomberg News' Jerry Doyle joins us now. So the obvious question is, why did it take 50 years to get back there, Jerry? No appetite or no resources?
Well, I mean, I think the simplest answer is that space is very hard. It's extremely resource intensive to send somebody just into orbit. Getting all the way to the surface of another celestial body like the moon is even more resource intensive. And then after the Apollo program ended, NASA was looking for ways to spin things forward, and they came up with the Space Shuttle program, which was extremely innovative for its time, a reusable space plane. And so it was just focused on exploring Earth orbit and the kind of science you could do there. But now I think there's a lot more sort of political impetus to get back to the moon.
Now, Artemis II is going to go around the moon. Explain to us how it actually does that, because that hasn't been done before.
Well, the Apollo capsules and those spacecrafts obviously did go around the moon. This is sort of a shakedown cruise, as it were, for Artemis II. They're going to try out all of this new hardware that's been developed for the program, taking it not just into lunar orbit, but like the long path that it takes to get from the Earth to the moon. They're going to use that as an opportunity to test new hardware, test new techniques for maneuvering the spacecraft, sort of try out ways that they can try to dock with other hardware in space and communication systems, just sort of make sure all of this stuff works properly for the much harder task of actually landing on the surface.
Yeah, so we're not even close to landing on the surface. That'll come in a future mission, I guess, and then maybe even a moon station like the International Space Station, right, to try and learn more about the moon and its orbit.
Yeah, NASA originally had planned to have something in orbit around the moon called the Lunar Gateway. Now they're sort of looking more at a surface-based installation where people can live permanently to do science, research, look at ways you could extract different resources from the lunar surface that will hopefully, they think, make it easier to explore the rest of the solar system.
All right, Jerry, always exciting to talk space. Thank you so much. Bloomberg's Jerry Doyle there. Let's take a look at these markets because we're in for an interesting final day of trading for this week. Of course, we're headed into the long weekend. And if you had disappeared for 24 hours, you would be shocked to find futures lower after 2 days of gains. One of those days, an absolute whopper of a day. Well, we're giving back some of those gains today. S&P futures pointed to a lower open, and that's across the board. A really down day in Asia as well. Oil completely ripping higher off the back of President Trump's first primetime address to the nation since the beginning of the war. As you can see, the dollar index is higher, gold is off, Bitcoin is off. The war trade is firmly back on. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. Time now for your front page news. First up, on the Washington Post, the Supreme Court appearing skeptical of President Trump's effort to end birthright citizenship. The Post says the High Court looks poised to uphold the legal principle that almost everyone born on U.S. soil is a citizen. A decision is expected by June or July. Next up, on the New York Times front page, Republican leaders agreeing to move forward with legislation to reopen the Department of Homeland Security. It resurrects a bipartisan deal that President Trump and the House GOP had rejected most vociferously last week. The Times says it's a sharp reversal by the lawmakers and by President Trump. And finally, the Financial Times reporting Gulf states are reconsidering building costly new pipelines to avoid the Strait of Hormuz. The FT says Saudi Arabia's 1,200-kilometre east-west pipeline was built after the Iran-Iraq tanker war in the 80s and is now a key lifeline. The kingdom is now considering how it can export more of its daily production by pipeline, and other Gulf countries are also reassessing options. Take a look at how your market is shaping up for this Thursday and final trading day of the week. We have futures pointed extraordinarily lower after a down day across Europe and Asia. The dollar index much stronger and yields up at least 5 basis points across the board. We'll be speaking with Peter Kinsella of Union Bancaire Privée next about these markets. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Markets on edge, stocks dropping, oil surging as President Trump's primetime address dampens hope for a swift resolution in the Middle East. Tariff announcements on deck. The U.S. set to roll out a tiered system for steel and aluminum imports, as well as new levies for some drug makers. And NASA astronauts on an historic mission to lap the moon reach a stable orbit. So one silver lining in that group of headlines there. I tell you what, it's not so silver lining a type of day in the markets. If you look at Brent crude, we're trading above 108, only $1 lower than that for WTI, and it's impacting all asset classes around the world. You're seeing the yields on sovereign debt rising at least 5 basis points. In Japan earlier, the 10-year was up 9 basis points, and it's really just this reversal of the trade we had seen for 2 days previously as the markets began to hope that maybe there was some kind of resolution. The U.S. might pull out. There might be some kind of a Strait of Hormuz type closure, or at least clarity to the situation. But as Terry Haynes of Pangaea said, Trump punctured the market's Iran fantasy. And boy, is that fantasy punctured today. Let's take a look at futures. Lower after a down Asian session. At one point, the Kospi was down more than 6%. And the dollar index, as you might imagine, is getting bid by about 0.4% higher now across a basket of currencies. Let's get to some individual movers. Here's Zavir Abu Omar.
Good morning, Bonnie. We spoke yesterday about big oil in the U.S., and it was a slightly different picture. It was all in the red. It was one of those sectors that were suffering yesterday, down nearly 4% at the close of the S&P at the last trade session this morning, and post the remarks that we've seen from President Trump suggesting that this war in the Middle East could go on for a little bit longer than we had expected yesterday. That's driven big oil stocks in the U.S. higher as much as 3% in the case of Exxon here, and that follows a similar trend by the energy sector in Europe. Now we flip the page and we take a look at Nvidia. Nvidia is suffering today. This is from a wider sentiment that has soured in the tech sector. This follows a negative trade session in Asia, but also in Europe. We saw the likes of ASML down pretty significantly at the open earlier on. And then finally, we take a look at airlines in the United States, also following a trend from Europe earlier, and airlines are suffering this morning, down nearly 4% in the case of United Airlines on the back of those surging jet fuel prices as a result of the tensions in the Middle East and the possibility that this escalation will likely go on for longer than expected. Airlines are not doing very well just like they aren't in Europe this morning. Vonnie, back to you.
No, that's for sure. Abir, thank you so much. Secondary effects to be felt for some time to come. Well, President Trump stirring the market with threats to escalate the war with Iran.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death.
Joining us now from Washington is Bloomberg Government's Mika Sollner. Mika, can you draw the through line for us between President Trump's comments to various news outlets earlier yesterday and this first primetime address to the U.S.?
Yeah, Vonnie, the White House is really aware that, that this war is unpopular with the majority of Americans. And a lot of people are really feeling it to their pocketbook and blaming Trump's actions in Iran, the military operation, to rising gas prices. So the president clearly felt like he needed to address the nation, address the fact that he believes that those costs are temporary. He called it a temporary increase in gas prices and reassured people that the economy is going to come back and that the operation is going to slow down here in the next 2 to 3 weeks, which again is a longer timeline that was initially laid out by the administration, which was 4 to 6 weeks. We're now in week 5.
Yeah, exactly. And he certainly had markets celebrating what they thought was going to be a swifter resolution yesterday, but that's not the case today. Now, domestically, there's also issues for Trump to deal with. So, for example, they're changing the tariff system. Explain what's going on to us.
Yeah, I mean, the administration has been very bullish on its tariff policy ever since the Supreme Court struck down its initial use of implementing tariffs worldwide. And so the White House is proposing the up to 50% tariffs on steel and aluminum. But again, this comes at a time where there's a lot of economic anxiety for many Americans. So we don't know yet what this is going to do and what this is going to do with everyday consumer costs. So this is yet another gamble, I believe, by the administration when it comes to what's going to kind of trickle down to the average person.
Yeah, absolutely. And we're seeing it in Trump's ratings as well as approval ratings. But we're also getting potentially new tariffs on some drug makers. Do we know any more about that?
Yeah, this could roll out as early as today. I do think that this is interesting. The administration has been leading on some of its policies. I know that leading members have been trying to pitch Congress to try and codify some of Trump's health care plan. This is kind of the cornerstone of the president's affordability agenda, is these most favored nation and of the drug prices, and trying to get Trump RX, the website that offers lower prices to consumers, kind of at the heart of their agenda. So I think that this is one way that they can try and put pressure on drug makers to make deals with the U.S.
All right, Mika, thank you so much for the update. So much happening every day from Washington. That's Mika Sollner of Bloomberg Government. Joining me now is Peter Kinsella, Head of UK Investment Services at Union Bancaire Privée. So, Peter, what happened in the last 24 hours? We thought this was all done and dusted, right? Mm-hmm. Although there were people out there like Ed Yardeni saying he reserved the right to change his mind again if President Trump did. What happened?
Well, I think we kind of had the opinion that Trump was trying to walk back from what's happening in the Middle East, trying to organise a situation in which he can resile and get his troops out of, and get his forces out of the Middle East and the conflict. And it seems he's doubling down. And so with that, all of the optimism we saw yesterday has evaporated overnight. And we're now preparing for the very real prospect of another 2 or 3 weeks of this air campaign. We'll then clearly make an assumption that we're going to have extreme disruption into the oil market. That's already been evident in the oil prices today, and you're seeing that across markets. Airlines lower, etc.
What happens the next time this happens? Is it a case of fool me once, shame on me, fool me twice? however you end that.
Sure.
I can't imagine that we'll see, $20 come off oil anytime soon again.
No, not at all. I think there's a few things happening. The first is that the supply disruptions we've seen, not just in terms of stranded tankers, but also reducing in production, means that we're going to be dealing with a very lumpy profile, even if the war ends tomorrow, right? The fact that we're going towards a more extended period of war, and we're still, it's kind of at the moment unclear what the outcome is going to be. If we have sort of Iran in control or tariffing, straits going through the ships going through the Straits of Hormuz, it means we're going to have a much higher risk premium on oil in the future, right? So whereas before this conflict started, we were all assuming, $60 a barrel for the rest of the year on oversupply, on this oversupply narrative. Now that narrative's completely gone. So I think we're going to have a deeply embedded risk premium in oil prices, at least for the foreseeable future, and that's going to have knock-on effects across the entire supply chain.
And then are we going to continue to see dollar strength at that point and real serious emerging market currency weakness?
Yeah. I think if we start with the EM weakness, right, you've already seen, obviously, Turkey, doing a gold swap, trying to support the lira. You've seen significant weakness in the Indian rupee. Both of those are big energy importers. And so really what you're seeing at the moment is in terms of trade shock, but it's morphing into a balance of payment shock, i.e. Significantly lower trade balances on an assumption of higher oil prices. That poses a big risk for the euro. Eurozone imports around 8.7 million barrels per day. That's the daily oil use. If you assume $100 a barrel, going forward, that's going to knock the best part of 100 billion off the Eurozone's trade balance. So this is a really, really significant shock, right? We're morphing from a terms of trade shock into a balance of payment shock.
So what are you profiling then in terms of euro-dollar, for example? Do you have a wide range of forecasts?
Well, at the moment, look, you're kind of, if you look at any balanced fund that we manage and some of our discretionary funds, we're in 100% risk management mode, right? That's been very heavy hedging of our equity portfolios, very short duration on our fixed income portfolios, and our performance has been really, really good relative to the market thus far. For the currency effect, what we're seeing is certainly a strong-ish dollar at present, the prospect of an extended weakness for the euro and definitely the Japanese yen, in the short term. But again, much will depend on the duration of the conflict, the scope and the scale.
Will markets start to concentrate on central bank actions soon and sort of ignore the Strait of Hormuz, just sort of build in assumptions that it's going to be difficult there for a long time to come?
I think so. I think vis-a-vis central banks, they'll be very careful not to overdo it with rate hikes, because what they really have to do is you accept the supply shock. There's not much they can do about that. What central banks have to focus upon is the extent to which domestically generated inflation increases. So I suspect that market expectations on very aggressive rate hikes in the short term are probably on the wrong side. But I think we have to assume we're going to see some tightening in policy.
Well, and also it's doing a little bit of the work of the central banks for them, right? That's what Ed Giordani told Surveillance the other day. The bond vigilantes might help out here. Sure. At the same time, the Fed doesn't seem all that concerned yet, assuming that this is, another sort of transitory type of inflation shock. Will it be as transitory as the Fed is thinking? Probably
not. I think anybody who worked and lived through 2020 into 22, we kind of hate that word transitory, right? So I think any central banker using that term would only do so with extreme discretion. I think what we have to see really from the Fed, they've obviously had their meeting 2 weeks ago. In a new scenario of very extended to higher gas prices and higher bond yield prices, that is going to affect the consumer. There's no doubt about that. So I think that the narrative from the Fed could well change.
Peter, you said you were very hedged when it comes to equities. How are you doing that?
Well, we entered we kind of started hedging our equity portfolios with S&P puts and so on, which performed very, very well. We've extended those puts, from selling June into September. So in a sense, really taking profit, maintaining our sort of, I would say, hedge positions. And that's been a very, very good trade for us. We dramatically reduced the risk exposure in our funds. And again, as I said, we're just in 100% risk management mode because we're seeing a genuinely unprecedented oil price shock, and this is going to have ripple effects across markets. If we see another,
couple of days of gains like we have for the last couple of days, though, would that make you nervous that maybe you're missing out on getting back in some form? Well,
I've hedged with puts, right? I'm still fully invested, so I'll capture the upside there. But it's really just about the risk management using puts to do so at present.
And being on when the markets are on, right?
That's it.
You can't go to sleep in this environment. Peter Kinsella of Union Bancaire Privée, thank you. Now to other top stories trending on the terminal this morning. The headquarters of Goldman Sachs in Paris was placed under police surveillance Wednesday night following threats believed to be from an Iranian group. That's according to the newspaper Le Parisien. Paris prosecutors said no suspicious items had been found at the site on Thursday morning. The threats come just days after authorities foiled a bombing attempt near the Bank of America office in Paris. The largest gasoline pipeline in the U.S. has restarted after an outage Tuesday. Colonial Pipeline's Line 1 stopped shipping fuel after a portion was damaged by a third-party work crew. Prolonged outages of Colonial's pipeline system can significantly disrupt fuel shipments from the Gulf Coast to the East Coast. And NASA successfully completed its Artemis II launch, kicking off a landmark journey. The Artemis II mission aims to establish a base on the lunar surface and ultimately venture on to Mars. Coming up, 1 year since President Trump's global tariffs, with more to come. We'll take a closer look next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. The Trump administration is set to outline a tiered system now for its steel and aluminium imports while preparing to unveil new levies for some drug makers. This comes as we mark 1 year since President Trump's global tariff kicked off. Let's bring in Bloomberg's Enda Curran for more. So we're 1 year old on the global tariff push, Enda, and today it looks like we're going to get a little change in some of these tariffs. Explain to us what's going on.
Well, in terms of the steel and aluminum tariffs, one of the big complaints from business has been how you calculate the value of steel and aluminium within products, which adds to the overall tariff rate on a product. And our colleagues are reporting today that there's probably going to be an announcement around that the calculation will be based on the total value of the product, total value of steel and aluminum in a product, with a tariff of around 20% and being tiered then as you go down. So it's a way of simplifying how you calculate the tariff on steel and aluminium, which has been a big complaint for business people. And the other thread today that our colleagues are reporting is that we may get some new tariffs announced on pharmaceutical companies who, in President Trump's view, haven't been doing enough to bring down prices here in the US. Though we don't have details on those tariffs yet, we know that they've been threatened to be very high level. But, taken together, it just adds to the idea that the hawkish trade policy pursued by the administration continues.
Just on the first part of the agenda there, and is the White House changing the way it's structuring these tariffs to change how it's calculating sort of derivative products and how the whole is calculated? Is it going to make it less or more costly for importers?
Well, I think the idea is to simplify it. One of the complaints from business people in this particular instance has been, how do you calculate, what percentage of a product is made up by, say, steel or aluminium, and then therefore how do you calculate the tariff from that? So there's been some pushback on that from the business community, but it just adds to the idea that after a year of roller coaster trade policy, you mentioned we had the Liberation Day 1 year ago. Since then, we've had exemptions. We've had trade negotiations, tariffs on pause, on hold, tariffs going back into effect, an effective tariff rate going up and down, and of course the Supreme Court ruling. But after a year of all of that, we are still where we started with the administration. They are very serious about pursuing the use of tariffs across the board on imported goods to enforce their trade policy, and whether that's pursuing options through existing trade avenues that they have, for example, the Section 301 that we hear a lot of conversations about, or even drilling into derivative products like steel and aluminium, what part of a product is made up by steel and aluminium, and of course now potentially also pursuing pharmaceutical companies. It just adds to the idea that despite all of the up and down, the volatility with trade policy, the end point remains the same. They are pursuing tariffs and very serious about imposing tariffs on goods.
Yeah, and one way or another as well. And the pharmaceutical tariffs that we're going to see, are they going to be on individual companies? Sorry.
Yeah, we don't have the full details yet, but that's the expectation, Vonnie. We have had some of the big pharmaceutical companies have already made agreements with the White House to participate in a scheme to bring down prices. Of course, health analysts have their own views on that policy, but those pharmaceutical companies who haven't yet sort of come into that policy are probably the ones who are going to be at the forefront of whatever tariffs are announced. And we don't have those details yet, but it has been a long time coming. And remember, more tariffs will be imposed in the months ahead as well, because even though the Supreme Court struck down tariffs in their ruling back in February, lots of investigations are underway and will be expected to be underway in the months ahead into products coming from countries all over the world that will eventually resume in tariffs being reimposed. Now, one question is what level of tariffs will be imposed on both pharmaceuticals and other goods, given the cost of living story here, especially acute now on the back of the energy impact due to the Iran war. And of course, don't forget the political calendar with the midterms coming up in November. So there's some discussion among economists what level of tariffs will ultimately be imposed against that kind of a backdrop. But nonetheless, the story remains one of tariffs full steam ahead rather than sort of a broad-based retreat from it.
And thank you so much. That is Bloomberg's Enda Curran there with a big roundup for us. Let's get back to commodities now. We're seeing oil higher, significantly higher in today's trade. $108 a barrel when it comes to Brent, and that spread with WTI only about $1. Refined products as well also soaring. Emma Ross-Thomas is back with us to explain. Emma, so like a $10 swing, I mean, that's huge. Is it that the market was overpricing the risk to the Strait of Hormuz, or was it underpricing what we thought would be the relief?
Yeah, I suppose what's changed overnight is that we've got less certainty when it comes to duration. And since the beginning, when we sort of tried to calculate is this a crisis or not? There are two factors, right? One is the scale of the disruption, the size of that shock, and the other is how long it will last. And I think one of the things that we came away from last night with is a sense that A, there could be an escalation, and B, that sort of that 2 to 3 week idea seems to have sort of taken a bit of a back seat. And so that's what's really, I think, driving prices. I would just point out, actually, with the spread, I think the TI Brent spread is still pretty wide. Actually, it's just that if you look at, depending on which month you look at,
that's actually very important,
because that is quite that would be quite striking.
It would be, wouldn't it? I mean, I guess the idea is that the US has plenty of oil, and in fact, places like Japan are coming to the US for help on things like helium. So it's not just oil. There are going to be shortages of all sorts of different refined products.
Yeah, absolutely. And you saw the price of diesel above $200 a barrel, the equivalent. In Europe, we're already... So, Asia was at the forefront. I think we had this morning headlines from Korea talking about saving every last drop of fuel. In Europe, what our reporters are hearing is that in the next few weeks on diesel, there could be concerns. And then when it comes to jet fuel, which I know people are, it's Easter week and people are thinking about holidays over the summer, jet fuel, again, what we've heard in Europe is that we're OK for April, but there could be shortages in May, which is, in fact, just around the corner.
I think the market was very relieved that it looked like there was going to be a swift end. But even if it goes a week or two more, is the damage increasingly done now? I mean, we were asking that question last week. Even if it came to an end tomorrow, would the damage be done? Is it done now?
Yeah. So I think there are a couple of things to unpack there. On the one hand, yes, you've got lasting damage. The case of, Qatar, LNG, they've been talking about, I think, 5 years to get that back. So that's one sort of element. The Strait of Hormuz, will we go back to the pre-war status quo? I think there are some big question marks over that. We have Iran already enacting some kind of the toll booth is what the industry is calling it. So I think there are some question marks over whether, even if it stopped tomorrow, do we go back to the pre-war normality? Probably not.
Yeah.
And then, of course, damage to energy assets.
All right, Emma, thank you so much. That is Bloomberg's Emma Ross-Thomas. This is Bloomberg. This is how your Thursday trading session is shaping up. It is the final trading day of a holiday-shortened week, and futures are pointed well lower off the back of that rise in Brent. Up above $108 a barrel now. Yield across the board up about 5 basis points. Gold lower, Bitcoin lower. That's it for Bloomberg Brief. Surveillance is next.